Welcome to the lounge and the Indices report, and starting with the ASX 200 CFD. And we are looking at, from this low here on this daily chart, we've got wave 1, ABC for wave 2 here, and we're looking up here for wave 3. In wave 3, we're looking for 5 waves, and it appears that we have wave 1 and 2 and 3, and we'll be looking at 4 and then up for 5. Now, this leg through here, if we just drill into that point, we are looking at this in terms of, from wave 2 here. Wave 1 is pretty clear here, and wave 2 is clear. And then we've got smaller 1, 2, 3, 4, 5 for green wave 1, because from blue wave 2 to blue wave 3 we'll be looking for 5 waves. So in green we've got wave 1 and 2 here, and then we have wave 1, 2, 3, 4 and 5 here for wave 3 here. Now in this particular case here we've got wave 1 quite long and wave 3 is shorter. However, wave 5 is shorter than wave 3 here, so it fits the Elliott count. So we've got wave 4 here, and then up for wave 5 here. So we were looking at 1 and 2 and wave 3 here with 5 little waves in it. And yesterday we were in here, and I was a little bit concerned because the US markets were down, and this wave 4 here that we were labeling was starting to come into price territory of wave 1 here, which would have eliminated the count. But I know with derivatives it happens at times, so that's fine. But it was nice to see the market push up here. Not the fact that we're long in the markets, well that's fine, but it's also nice to be working with a stable and clear wave count. So yes, from 5,500 here we've got 1, 2, 3, 4 and 5 here. So we're very close to a top here, and with our bullish weekly cycle we were looking for Friday and Monday to be the bullish days, and then Tuesday morning is normally profit taking in the morning session, and the trend can resume in Tuesday afternoon. Wednesday's like a V-shaped day, and Thursday's the bear day. So keeping that in mind and seeing where we are here, it's highly likely that that we'll see a correction here. Now, if you understand the levels a little bit, this I call it a 65 number. 5650. It's the 65 in the middle that becomes quite important. It's actually quite a strong number, and you'll see that come into play now. I normally find that it's actually stronger than the 56 number. So there's highly likely going to be a turning point here. When we look at this particular pattern here that we're looking at here, is really lined up with the banking and finance sector more so than the other markets, other sectors. So, if we look at CBA and say ANZ, because they've got slightly different counts, we were looking at CBA from just on the daily chart here from this particular low here, as wave 1 up here, wave 2 here, and we were looking for wave 3 up here. And in wave 3 we've got 5 smaller waves here, and we're also at the number 90 here as well. So it's a medium level for us in terms of trading levels, but it's also a large whole number. So the probability of having a correction across this level is up around the 95% mark. Now, like it's done with 80 here, it didn't stop here very much. So it's moved up and then it's come back. So in one way or another, this is, one way or another, there'll be a correction here. It's normally group 1. So, in this particular case here, if we'd found the top of group 1, which is always number 3, so 83 here. So if 83 became the support here, then we would be going long from that point. Otherwise, we wait and look for it after the correction. And this is the same up here as well. So we can look at 93 up here, because this market can move anywhere up into this area through here before it has a correction. If it ever found support on 93, then we'd need to go long from that point there. But we are expecting to see some type of correction across this level, and yeah, it can push up through that 90. Here's just on the 2-hour chart here from this wave 2 here, 1, 2, 3, 4, and looking for 5 waves up here. I can see that we've got a bit of a correction here in 3 waves here, small. So we'll see another little push up here. So we're likely to see a little push up here. So looking for maybe the high on the Wednesday, or maybe even the Thursday, before we see a corrective pattern through to here, with 88 as the first minor level of support here. The ANZ, while we're here as well, it's got a slightly different count, and in this particular count moving up through here, it's pretty much the same. It's a different count in terms of this whole corrective pattern across here, but it's, for our purposes at the moment, it's fine. Now, with this particular structure, we're looking up for wave 1, nice A, B, and C here, counter trend pattern for wave 2 here, and then we're looking up for wave 3. Wave 3 target should be up at 34 here at a 162% extension of wave 1 here. So it is possible for it to move higher. However, when I drill into this particular move here, it does appear that we've got 5 waves there. Now, it is a third wave because I've put the trend channels in here, and it's typical for a third wave to break out of the trend channel. So not that it's a big deal, but it helps us work with that, but we know it's a third wave anyway. But drilling into this third wave here to find a top here, from wave 2 here we can see wave 1 and 2 here, and then I've counted from wave 2 here, wave 3 up to here, wave 3 normally being the longest and the strongest in stock anyway. So we've got wave 1 and 2 here, and then 1, 2, 3, 4, and up for 5 here for the third, the fourth, and the 5th here for the third, a very small 4th wave here, and then we've got wave 1, 2, 3, 4, and 1, 2, 3, 4, 5. So I think that we're getting quite close to the top here as well. So we should be seeing a correction here. The 38.2 comes in above the 32.50 area through here. But once again, we're working with group 1 as well, minor group 1 here at 33. So this is a bit of an overshoot pattern. So normally the distance above here will be the distance that comes below here. What we want to see later on, though, is support on here. So we would like to see some type of corrective pattern here that we understand, and then looking for support, tested support on 33. This gives us our reference point, and then we can trade long from that point there. Wave 4s, however, do get complicated in most cases if wave 2 is simple here and wave 2 is quite simple here. So we should expect wave 4 to be rather complicated. So let's just see how that goes out. But with wave 4, we don't normally trade wave 4s, and we allow them to mature before we make any decisions. We need to be sure. Okay, moving on to the US markets and looking at the bond market here. Well, the notes actually, US notes, and working in opposite to the S&P 500. Now, we're looking at wave 4 here, and we're looking at a structure that's moving to the upside here, wave 3, 4, and 5 up to here. Now, currently, we have a nice little 5-wave structure in wave 1 here, an A, B, C for wave 2, and then 1, 2, 3, 4 here, and 5 up here. So when this pushes up through to here, then we're going to see some softness in the S&P 500. So this market's still working higher, and the S&P 500 is under pressure. So when we look at the S&P 500, we've been working with a triangle pattern, and that triangle pattern should be completed now. So we should see it move up. But my problem with it moving up is the notes market, US notes, not working higher. So we should see the S&P directly work lower. So it's going to be interesting to see what this market does. So essentially this last low here that we've got here for an Elliott wave triangle E, that really needs to stay in place here. So essentially we've got wave A here, wave B, wave C, wave D and E. So it's an Elliott triangle, which is a 5-wave structure with each internal wave being 3 waves each. So it does fit and it does end there. Let's just see if we can establish a nice strong support on 2000 here. Technically, it would be nice to see the market at 2030. So 2030 is the top of group 1 here. So support on top of this here would confirm that we would have a trend to the upside. We should be able to nail it earlier than that as well in terms of the internal structure up to that particular point. But at the same time, there is another pattern that we have in a bigger bearish picture. So this is why we've got to be careful, and this is this one here. I've seen this pattern before, and I've been lured into a triangle pattern here before. That was going years back. I think it was at 13,000 on the Dow or something. So we just need to be careful here. We are seeing a corrective pattern here. If it fails, then we'd be looking at an A and a B and a C wave here as a move across the 2000, the major trading level here. So we are sort of splitting hairs here at the moment. So just drilling into this triangle pattern here, this is what we should be looking at now though. But let's just see how we go. We need to see an impulse wave up here. We need to see support on 230 here. We need to see 5 waves in this first little move up here, which we are seeing at the moment, which is basically up for wave 1 here. We'll see some type of corrective pattern here for wave 2, and then moving up for wave 3, 4 and 5 to make wave 1 up here, then back for 2 and so on. So let's just see how that goes out. If you see nice support on top of 2000 in the next session or two, then you want to be on the long side. You want to be trading on the right side of the closest largest number, and you need to ask yourself, is that support? Is it tested support? Is it tested resistance? And so forth. So anyway, we've just been watching the development of this, and let's see it unfold. Now, obviously the Dow Jones is the same as well. So this is just the DJ here, and yes, well, important numbers here, of course. Well, 17,000 is a nice whole number, so this is a bounce off that, and we do need to see it move up in 5 waves. So we've got our initial little move up through to here. We need to see some sort of corrective pattern and support on 17,200, a 72 number. So that's going to 72 is always important, as you know, but also 17.3. So 3 is always the top of group 1. So what support does on top of group 1, it separates it psychologically from the closest largest number and allows it to run from that point. So support on 17,300 separates any pull from the 17,000 here. It's just that when I say psychological, I'm talking about order flow. I'm talking about once support is found on top of group 1 here, orders tend to dissipate from 17,000, the closest largest number, and psychologically people start looking at number 5 up here, which is 5 is the second strongest number. So it tends to support on top of 3, tends to pull it up to 5 at that point, and it leaves the dock at 17,000 at that point. Anyway, we're in a downtrend. We're searching for bottoms here, but we need confirmation of what we've got. So this market could certainly turn bearish based on the notes. So it's just splitting hairs to see if we've got a low in place here. So be mindful. The DAX and the FTSE, the European markets, are in a positive trend to the upside, which helps the Australian market a lot, and will also help pull the US markets up as well. Sometimes the DAX leads, sometimes the S&P leads. One by another, they'll both catch up to each other. Now, just keeping it pretty simple on the daily chart here, we've got up for 1, back for 2 here, and we're going up for wave 3 here. Now, the 11,500 is a medium level, so it will carry some weight, and we will see a wave 4 correction across here. In the meantime, we're looking for wave 3 here, from wave 2 to wave 3, and we're looking for 5 waves in that sequence. So we've got 1, 2, and we're in the third wave here at the moment. And in this third wave here, we're looking for 5 waves here. and currently we've still got further to go, but we will see a correction across as a wave, another wave 4, smaller wave 4 across the 11,000. So drilling into this third wave here leaves us at this point here. So this third wave here in blue from wave 2 here, we're looking for wave 1, 2, wave 3 here, and this counts here as 1, 2, 3, 4, typical sideways correction for wave 4, and then 5 waves up for wave 3. We've been working through wave 4 here, and now we'll work up to wave 5, and then we'll have a correction here. This correction will be wave 4. It should be bigger than this one here and just as complicated. This wave 4 was complicated. This wave 4 wasn't very complicated, just a little bit time consuming. This degree of structure is going to be bigger than this one here. So there's this degree of wave 4, there's this one's bigger here, and then this one here will be bigger as well. So just drilling into this one here, we'll be looking at moving up to the 11,000 here. So we've got from wave 3 the A, the B and the C here, and then we're looking up for wave 1 here, back for wave 2. We've got 5 little waves in here, so that equals wave 1, back for 2, 3, 4 and 5. So that's where we're looking for there. So you can trade long up through there, just find the closest largest number, so you've got a price point to work from, and then you've got a place to put a stop as well. Always put stops at odd numbers. People think in whole numbers and even numbers. Now the FTSE here, just on the monthly chart here, just to bring in the bigger picture here, you know, this level here, this 6,500 is a medium level. It's halfway between 5,000 and 8,000, which is a major trading level as well. That 8,000 should be in orange, but that's okay. This is the halfway mark here, the 65 number, very important. It was resistance, and now it's developing as support, and we're looking for wave 5 to move up through to here. So we've got wave 1, wave 2, wave 3, 4, and 5 here. There is another count in this, but I won't go in there just yet. It doesn't really matter because they'll both be heading in that same direction. And this is it just on the weekly chart here. So from this low here, we're looking for 1, 2, 3, 4, and 5. We're looking for 5 waves up. So we're in the third wave at the moment here. In that third wave, this is what it looks like on the daily chart here. We've got 1 and 2 and 3 here and 4 here. So in this third wave here, we're looking for 5 waves, and let's see where we are at the moment. So a little bit complicated, but from wave 2 here, we're looking up to wave 3, which I've got up here, which I could move across here somewhat over here. And we're looking at from wave 2, wave 1, 2, and then all the way up for wave 3 here with 5 green waves in there. We're looking at wave 4 here. Look, it's a typical complicated wave structure here. I won't go into it and pull it apart, but the DAX has started to move up. We should expect to see the FTSE move up. So to play a safer bet, the closest largest number would be 6,800. 8 is a profit-taking number, and we've seen that come into play here. And we've also got the old high at 6.9 here. So yes, well, support on 6.8 here would be the catalyst for a safer trade to the upside, and we'll be looking for a move just above the 6.9 here. It may get to 7,000 here. In this structure here of wave 3 from wave 2 here had the extension in it. So that means that wave 1 here and wave 5 will be roughly the same length, but we want to see wave 5 take out the top here. So anywhere above the old high here at 6.9 will suffice for that top to come in play there. And in fact, it may even be a truncated 5th wave where it doesn't even make a top, but let's just see how we go. Alrighty, well, that's it. I just want to have a quick look at the NASDAQ actually. This is a weekly chart here, and it's just that, look, we're up at 4,000 here, and This is a typical classic trading levels pattern across this particular level here. So what I mean by that is the arrival, the reaction, and then the first high above the level, and then the corrective process. So it's highly likely we're going to see the Apples and the Googles of the world go into corrections shortly as well. So we'd be looking at a wave 4 across here. So we are looking at a bearish pattern here. Just thought I'd throw that in, but I need to do a little bit more work on this one. I haven't updated it for a while, but it's pretty much gone to plan here. But once again, we can if the S&P 500 and the Dow Jones fail in that triangle pattern, this is what we'd be looking at here, a wave 4 here, back to the wave 4, 1 lesser degree here. So possibly some shorting opportunities coming up in the NASDAQ. We just need to get confirmation on that first. All right, thanks for tuning in. Cheers.